Chris Weston joins us now. He's the head of research at Pepperstone. And we'll stay on the Donald Trump theme. There's been a bit of a Trump-led decline on US markets, so I imagine we'll probably follow that lead.
Yeah, I mean, look, I think Donald Trump got out of the bed the wrong way on Monday, and he decided that he's going to take on the whole world. He's taken on Brazil, Argentina. He's put tariffs on there because of currency intervention. He's put $2.4 billion worth of tariffs on France, certainly in their champagne and their luxury goods. He's called out Germany under their funding for NATO and suggested that they needed to do more after with tariffs on them. He's taken on Europe because of the Airbus subsidies. And now we're seeing a situation where he's really giving the idea that he's going to readdress the phase one deal into 2020. Now, we've gone on this firm belief that we were going to see some sort of deal that meant these tariffs, these 15% tariffs on the 15th of December weren't going to be enacted. Now we're led to believe that perhaps there's a good chance that happens. The markets don't like that. We're seeing some panic coming through.
Yeah, well, how concerned are you? Can you elaborate on that? Once they come through, is it the 15th? Yeah.
Exactly, yeah. So that weekend that we go into the 15th, the idea that if you're holding exposures, then we could have a pretty volatile Monday. That's something that does concern me a little bit. Now, as I said, the vast consensus had been that we were going to see those tariffs not being enacted, but we were going to see that being readdressed, those talks being readdressed sometime around Chinese New Year on the 25th of January in 2020. Now, after what we heard from Donald Trump overnight and what we heard yesterday from the Commerce Secretary, Wilbur Ross, it suggests that perhaps they will allow those 15% tariffs. These are on some of the sort of consumer goods in the US, which will be a tax to the consumer. And the market doesn't like that. I think the word recession will be started to be bandied around again. After we'd seen signs that the US data was starting to improve, if these tariffs kick in, I think the market will get very, very nervous that we're going to see tougher times in 2020.
We'll see those growth figures today. Yesterday, we saw the terms of trade, which are pretty good for Australia. But what are you expecting from the figures today?
We're not expecting a lot. I mean, in terms of volatility for markets, I'm not expecting a lot. I mean, the market's looking for 1.7% growth, which is a 30 basis point increase in a year-on-year basis from the previous quarter. On the quarter, we're looking for, the consensus is we're looking for 50 basis points. Look, we've seen all the different subcomponents that feed into this, things like operating profit, inventories, exports as a percentage of GDP, so we shouldn't be surprised by the number. It shouldn't deviate too much from those consensus numbers there as well. And they're not exactly blowing the lights out here in Australia. Look, what I think is really interesting, Laura, is this idea of the February meeting, which is the next central bank meeting. At the moment, market's pricing a 55% chance of a rate cut. After today's market moves, we're expecting a weakness to play through. We'd probably be seeing about a 60% chance that we're going to see a rate cut coming through. So, in the market's eyes, there's a pretty good chance that we're going to see the cash rate down at 50 basis points in February.
Where's the Australian dollar in all of this, Chris?
We had a really good gain yesterday. Well, I say a really good gain. We had a decent move up yesterday. We looked like we were going to go up into 69 cents. And then I think all these sort of headlines that we've been seeing around Donald Trump, revisiting tariffs in 2020 and allowing tariffs to go up on the 15th has seen the Aussie dollar, which is a bit of a quasi-play, a bit of a proxy on China coming off those highs there. So a little bit of weakness playing through, but we're pretty stable, sort of mid 68 cents or so. But yeah, I think the idea that if this trade war does play through, then we could see some further weakness. But against the US dollar, it's a hard one. We're seeing a lot of the selling playing against our Kiwi brethren. So I think that's kind of the weakest house there. If you want to sell the Aussie, we've been doing so against New Zealand dollar, which looks really good. It's found its mojo at the moment. Okay,
do enjoy that when it happens. Chris Weston, head of research at Pepperstone. Appreciate it. Thanks for your time this morning.